The only way to become successful in the stock markets, whether you're investing or whether you're trading, is by taking small stop losses. Because when you take small losses, you are still in the game. And every time you take a small loss, you can get back on track and stay on the track till you become a successful trader. Normally, when people look for successful traders and investors, they are looking for people with flashy cars, flashy gadgets, and somebody who has never hit stop loss, always taking profits. That's not the truth. The truth is, successful traders and successful investors are those who have learned the skill of taking small losses and remain in the game or remain in a trade or an investment when they are right and they take huge profits. In this video, I'll be covering 5 important points why taking stop losses is very, very important. And the fourth point is one of the most important points. So stay till the end of the video because every single point is equally important. But if you understand all the points properly, you are on track to become a successful trader and a successful investor in the stock markets. Hi, I'm Dr. Joe and welcome to this video. I hope you all are doing great. Let me tell you a small story. There was a man who decided that he will train a few people how to trade. And he said that I'm going to train such people who do not have any relationship with the financial markets. Let me get common people and let me train them. His rule was very, very simple. Whenever the stock price goes above a 20-day high, you put a buy with a stop loss below the previous low. And whenever the price goes below a 20-day low, you put a sell and you put a stop loss above the previous high. All he did was train these people for 14 days and told them that do not break the rule. Just follow the rule and keep trading. These traders traded for 4 years in the stock markets, and you won't believe the profits that they earned were 5 times, 6 times better than the professional traders in the stock market. Yes, I'm speaking about Richard Dennis and his turtle strategy. Such a simple strategy. When Richard Dennis was asked in an interview that what is the secret of your strategy, he said very, very simple. Take small losses and take big profits. He said that even if I print my strategy on the Wall Street Journal, nobody is going to follow it and do the trading as per the strategy. Everybody likes very, very complex calculation and complex strategies. Actually, in trading and investing, the more simpler your strategy is, the chances of winning is always more. The most important thing that Richard Dennis told his traders were, don't be afraid to take stop losses. It's a part of the game. If you know that one stop loss, two stop loss, three stop loss is going to prevent your equity from getting eroded, do it. And whenever you hit a big profit, you will cover all the stop losses that you have lost. It was as simple as that. I have created a video on Richard Dennis and his turtle strategy. I have put the link in the description. So if you want to learn more about it, the strategy is available for you in my set of videos. Richard Dennis says that every single stop loss is an opportunity for you to learn and stay in the markets. Because if you take a big loss, you might blow out your account and you will not have an opportunity to learn and get back into the market. So it's important that you take small stop losses, learn, get back, do some minor tweaking, and stay in the markets till you become a successful trader. Every single successful trader have to go through the heat of these losses. You cannot become successful without going through this heat of stop losses. Mr. Daniel Kahneman, a psychologist from US, said that human brains are trained in such a way for centuries that they do not like to see losses. That is the reason traders avoid putting stop losses and try to average their wrong trades. And we have to train our brain to tell that stop losses is good in trading and investing in stock markets. Even the greatest investor, Warren Buffett, he also had a lot of wrong bets that he did. And he exited those investments when he felt that the price is going below the fair price that he thought it would be. So even the greatest investor of this world also exits trade when he feels it's wrong. So who are you and I? We have to take quick decisions, come out of the trade when we are wrong, and stay in the trade when we are right. So let me tell you the five important things or features about stop loss. Number one, hitting a stop loss is like taking a tuition. So if you want to complete your graduation with good marks, you go to a professional tuition teacher and learn from the tuition teacher's experience. Same as stop losses. Yes, you have to spend some money in tuition, same way you lose some money at the stop loss. But every single time you hit a stop loss, you learn something new. You analyze the market, what must have gone wrong, and then you learn to overcome those mistakes. So, stop losses is like a tuition. The greatest of the strategies have evolved from the stop losses that particular trader had. Point number two, stop losses helps you improve your resilience in the market. Yes, just imagine you're trying to learn swimming. Every time you go inside the water, drink a little bit water, some water goes into your ears. But every time you come back up, you learn something new, some new technique, and eventually what happens? You learn swimming. So now you're resilient. It's not that you're afraid of water. Now you can jump into the water, you go under the water. A little bit water might go in your ears, your eyes, your mouth, but now you're resilient to it. You know nothing is going to happen. Why? Because now you learned swimming. Same way, stop losses improves your resilience in the market. You learn to understand that it's a part of the game. Let me tell you about Jesse Livermore in the early 19th century. He was considered to be the greatest trader in the stock market. His strategy was very, very simple. Trade and take small losses. And when you're right, just stay, just sit and make profits. Twice he made huge profit. And when he made history. Just before the Great Depression, he entered a sell position and he made $100 million out of it. That's when he was considered to be the greatest trader of all times. But why could he do this? It's only because he was ready to take small losses when he was wrong. And he said that only sitting in the market made money for me. So when he was right, just stay back and relax and enjoy the profits. Point number three about stop losses. It helps you and gives you an opportunity to adapt to the market conditions. If you do not have a stop loss and market condition changes quickly, there are chances you might lose your equity. But if you have a stop loss in place, you know that you will hit the stop loss. You might lose 1%, 2%, maybe 5%, but you still have the balance equity to now adapt to the new market condition and trade. That is why journaling is very, very important. So whenever you take a trade, of course, you will get the trade history. But why you took the trade, when you took the trade, what was the market conditions when you took the trade, that is not there in the trading history that you will get from your broker. So if you create a journal where all this information is there, it will help you to take informed decision the next time you enter into a trade. I have created a video on journaling also. I put the link in the description. So if you're interested, the video is available for you to learn from my set of videos. As I told you earlier, the fourth one, the most important point, losses helps in risk management. Risk management is one of the most important factors when it comes to trading and investment. If you manage your risk well, you are able to stay in the market for a long time and you are there to make profits when the market rally. Risk management is like your seat belt. When you're driving a car, if you have a seat belt and you hit an accident, the seat belt will protect you, keep you in your place. Otherwise, you might just bounce off your front window and damage yourself, maybe even kill yourself. Or it's like the parachute. When you jump off a plane, just imagine if you jump off a plane without a parachute, what will happen? Zero risk management. But if you have a parachute, you know that you will land safely. That is risk management. You do whatever adventure you want. But as long as you have a risk management technique in place, you will live another day to enjoy another adventure. Same is the case in the stock markets. And point number 5 about stop losses. It's a part of the game. It's a part of the process. You want to get into trading and investing, you have to understand that you can do everything right, but still your trade can go in a stop loss or your investment can hit a stop loss. That's the beauty about the stock markets. Even after doing everything right, you check the trend, you check the market psychology, you check the volume, you check the candlestick pattern, you check the chart patterns, you check the fundamentals, you check the psychology of the investors. Still, it can go wrong because what is happening around is not in your control. But what is in your control is to put that stop loss in place. And if you survive in the market, you will become a successful investor or trader. Like Michael Jordan say, I missed more than 9,000 shots in my career. I've lost more than 300 games. 26 times I've been trusted to take the game winning shot and missed. I have failed over and over and over again in my life. And that is why I succeed. Look at Messi. I start early and I stay late, day after day. It took me 17 years, 114 days to become an overnight success. This is how trading is. People do not notice you till you become successful and they feel that you were just lucky. It's not like that. You went through the fire, you went through the heat, you understood what stop losses are, you understood what risk management is. You practiced it, you learned it, and that's when you became a successful trader or an investor. So, stop losses is your friend. That's why I say losers are winners. Losers are legends in the stock markets. Friends, I've written a book, Traders You Can Win, but First Learn to Lose. This book is all about these concepts, where first you have to learn to take these small losses to become a successful trader and investor. Friends, I hope that this video has made it extremely clear why taking stop losses is important to become successful in the stock markets. Friends, if you love the way I'm creating these videos, please like and share my videos. And if you're still not subscribed to my channel, kindly subscribe to my channel so that people who want to learn trading the right way and have the right mindset for trading and investing can learn it from these videos. And of course, it really motivates me when you subscribe to my YouTube channel. I always keep saying, keep learning, keep growing, keep getting better every single day. And this can happen only through practice, patience, and persistence in the stock markets. Friends, I also have a community of learners, investors, and traders where we discuss all these things in detail. If you're interested in joining the community, the link is there in the description. Friends, that's all in this video. Thank you. Namaskar.